Hi everybody, and welcome to the first ever top 3 trading ideas from Forex.com for the week beginning Monday the 13th of May 2013 with myself, Kathleen Brooks. Well, there's a few key drivers impacting the markets this week. That is the yen, Treasury yields in the US, and the resurgence of the dollar. Is the dollar about to pick up steam and stay there? They're the key things that we're looking at this week. But our top 3 ideas, well, number 1 is going to be dollar yen. Let's take a quick look at dollar yen. As you can see there, that is the hourly chart. We have backed away from those highs at 102.15, but life above 100 since we pushed through that level at the end of last week really seems assured. And we tend to think that anything that weighs down on dollar yen will actually be used as good buying opportunities. That's our first idea, is that any weakness in dollar yen in the next few hours or even few days will be used as a buying zone. Now, there are some good buying zones. 101.35 is very good support to start off with, then 170, and then obviously the closer we get there, we do think 100 now will act as very, very key support, at least in the short to medium term. But when you do look at this trade, a few bits of advice this week. First thing is some US economic data, including inflation data on Wednesday. That will be pivotal. And the other thing to just keep your eye on is Treasury yields. As long as we see Treasury yields continue to move higher, or at least get maintained at these stronger levels, just below 1.9%, then we think this should be positive for dollar yen in the more medium term. Now, the other thing that we're looking at is cable. That's our second idea. So that's sterling against the dollar. Let's take a look at the chart there. That is a chart with some moving averages in it. And it really just shows you how far cable has backed away from those highs. However, it still really is trading in a range. Now, that range of trading, I think, is really pivotal as we lead up to Wednesday's inflation report. So the inflation report, the last one delivered by Governor Mervyn King on Wednesday, 10:30 a.m. London time. We think this is going to be significant for two reasons. Number one, growth may be revised up just a touch after that better than expected Q1 GDP report. But we think what's more important, and possibly more important for sterling, is actually going to be inflation. Now, we think inflation could be revised lower quite substantially over the next 2-year horizon, largely because of that big decline in oil prices. Since the first inflation report of the year back in February, Brent crude oil has declined sharply, down more than 10%. Now, that could potentially weigh down on the Bank of England's inflation forecast for this particular inflation report. Now, we think that could be quite bearish for sterling because it does open the way to further easing from the Bank of England, especially under the new Governor Mark Carney, who takes the helm in July. So we're going to be looking at cable very, very closely. And if we do fall below 153.50, we think that opens the way to 152.5, which is the pink line on that chart, and is also the 50-day moving average. So a really key support level. But really, as we lead into this week, as we lead into that inflation report, we think that the onus is down for the pound. Now, our last trading idea for this week is gold. Gold has been very interesting. Let's take a quick look at the gold chart there. We've really struggled to rally. Now, we did fall quite sharply at the end of last week. This week, though, the rallies are all looking fairly lackluster, and we think gold could potentially any strength in gold anyway, could be used as selling opportunities. 2 levels that we're looking at that we think will be key resistance: 14.50 on the upside, and if we get above there, then 14.85. That is a 61.8% retracement of the large move that we saw at the beginning of April, so the large down move. So we think that's a key resistance level, could be used for selling as selling interest. Remember as well, rising Treasury yields should be bad news for gold, because gold is traditionally used as a bit of a hedge to QE. So the signs that QE in the US are finished should be negative for gold, so do watch out for that one. But overall, good luck trading this week. I hope you enjoyed our first ever top 3 ideas for this week with Forex.com. Please join us next week for more. Thank you.